morning, ladies and gentlemen. This is Bush Shorak, Options University, and we're looking at Monday, July 16th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. With that, let's take a look at the week that was, and we see that as we look at that week, not a whole lot took place on Monday. As we looked at Tuesday, again, not a whole lot was happening. And then finally we got into Wednesday, and we saw FOMC minutes on Wednesday afternoon at 2 o'clock, and the market was not particularly happy with any of those announcements, looking for a QE3 and finding nothing intimating that that may happen. Finally, we had some real news on Thursday. Jobless claims came in better than expected. Import and export prices were better than expected, and nonetheless, the market still went down. It was in one of its cycles. And then finally, on Friday, PPI, consumer sentiment, both came in better than expected, and the market shot up Friday, running up basically around 1.7%, and actually pulled the S&P back to flat for the week. So quite a move out of the market as we saw news come out on Friday, but it wasn't the economic news that moved the market. Actually, what moved the market was earnings, and earnings were impressive as we saw that. JP Morgan came out and had great earnings, Wells Fargo, and the financials basically led the market up in a nice big gain for a Friday, and it closed very, very nicely and had a huge large range day for the week. Next, let's take a look at what's coming in the next week for economic announcements, and we see that we have retail sales, Empire State Manufacturing Survey, business inventories on Monday. So certainly some news there that can move the market. On Tuesday, we have Consumer Price Index, we have Industrial Production, Housing Market Index, CPI, probably the most powerful of the bunch. Then as we look at Wednesday, we see that not a whole lot going on. Housing isn't going to really move the market. And then Thursday morning, we come into our normal jobless claims that'll tell us about the previous week. Also existing sales and the Philly Fed survey that's coming out to show us what some of the production is like in the country. Absolutely nothing happening on Friday as we see a week full of economic announcements. But we are in the heart of earnings season, and as we go into that earnings season, we see that we have some things of interest that will be taking place in the market during this time. As we look at next week, we'll be focusing on Citigroup and on Gannett Company on Monday. On Tuesday, we have Johnson & Johnson, Coca-Cola, Goldman Sachs, Intel, and Yahoo also reporting. Big guns coming out this coming week as far as earnings announcements, and that can definitely move the market. The market will be watching to see how they handled the last quarter and what their expectations are for the next quarter, considering the Euro contagion that's going on, Europe in recession, and China, of course, is showing decreased productivity. On Wednesday, we got earnings from Bank of America, American Express, IBM, Abbott Laboratories, Yum Brands, and Qualcomm. So we certainly have some earnings coming out, and this is one of those big weeks in earnings as we look at it. As we go into Thursday, we got the big Microsoft, and we've got Google. And we'll see what expectations are for Google as it's had problems moving up, as we notice it's kind of stalling out in the last this last quarter as it kind of went sideways to down. On Friday, we've got GE and Schlumberger. So plenty of information coming out this week as far as earnings. Economic announcements may not be the primary mover for the market. Primary mover is going to probably be those earnings. Next, let's take a look at the SPX, and we see that we're in a sideways trend, actually broke out this area as we look at it right here. Looks like it could be a fake out. It looks like it could be a continuation of an breakout. and move to an uptrend. We'll see what happens here, whether we end up with a head and shoulders after that big move on Friday, or whether we end up pulling back after that big move on Friday. We're at the top of that trading yellow zone that we have traded so much in the last couple months, and we saw that we definitely had a higher low and a higher high on Friday as we had a huge breakout, a move of about 1.7%, I believe I said it was, enough to move the market into flat for the week after those many down days in a row as the market went through its cycles. Notice how this diagonal line that we have drawn on the S&P basically held last week, and we then got our bounce off of the 30 and the 50-day moving average. So we were due for a technical bounce. We got it. Now the key thing is what's going to happen this week, and earnings certainly will have an influence on that. Looking at last week there, we see we were in a down cycle as the market was moving down, and we see that we had this huge move up on Friday. So we are seeing some improving in the market, and it's definitely moving in favor of the bulls. Will it break out of this yellow zone? Watch the first hour on Monday and see whether we get a higher high, higher low. And then with the higher high and higher low, look at that high and low for the first hour and see what happens to the market. Which side of that is going to trade it as an indication for what's happening for the week. All right, so we had a down cycle, and we're now in an up cycle as we got higher highs and higher lows on the SPX. Let's take a look at the Dow, which looked very much like the S&P. See that big, huge behemoth candle to the upside as we see that big gain in the Dow Friday following the overall market with the S&P. NASDAQ did much the same thing, bouncing off that 30-day moving average after we had that reversal signal, which looked like a doji, got confirmation, and have room above us and still trading in that yellow zone on the NASDAQ. So we can move higher on the NASDAQ without actually having a breakout and a continuation of that uptrend. Looking at the Russell, we see that we broke out of our yellow zone, had a reversal signal, got confirmation on Friday, and we could be looking for new highs. And watch if the Russell starts leading us up. Very well, the market may follow with it. Russell many times can be a leading indicator for the overall market. As we look at the indexes for the week, looking at the Dow, the NASDAQ, the S&P 500, and the Russell, we see that basically things look pretty flat. Only the Russell was down for the week. And year to date, we see everything up for the year to date. Dow up 4.6%, NASDAQ up 11.6%, S&P up almost 8%, Russell up almost 8%. So for the year, even after that big pullback that we've just had after about 7 pullback days in a row, we are still up for the year and ended up pretty much flat for the week. The VIX, of course, went back down into its normal trading zone between the 20 and the 15 as we see a rise as the market was pulling back, but as the market then explodes to the upside, we see the VIX coming down and closing around 16. Much is what we expect out of the VIX under those circumstances. We see the bonds trading at the very high of their range. Could be a good time for a short on the bonds. Watch whether we're going to get a lower high, lower low, and this will tend to go opposite the way of the rest of the market. So watch the bonds carefully and see how they respond, and you may have an opportunity on the short side with the bonds. All right, looking at the financials, we see that the financials can definitely lead the market, but notice we're very close to the top of that trading range, and we'll see whether we can actually break out of that with the financials. As JP Morgan and Wells Fargo gave us great numbers, we've got others coming out this week with Citigroup, Bank of America, and so the financials many times need to go up if the overall market's going to go up. Looking at oil, we see that the oil is not really moving much of any place, kind of in a trading range between the 30 and the 50-day moving average, and definitely in an overall downtrend for the last few months as we finally see some of these prices at the gas tank or at the gas station going down to what we would call more reasonable numbers. And it's pretty hard to imagine us calling 3.25 a gallon reasonable, but that is what it is. So gold actually had a nice little rally on Friday with the overall market, and we see that we are in an uptrend or an upcycle on gold, as it seems to be kind of a helter-skelter market, trading in anywhere over this range, gapping up big on any given day. Difficult to tell where gold's going, except if we're going to pick a target, it would be up there around 157.50. All right, next let's take a look at what kind of volume we had Friday. On this huge up day, we had kind of average volume. So no big volume to talk about in the spider. So yes, we had a big day up. Now the question is, are we moving higher or not? And so, like I said, watch that first hour of trading and see exactly where that opening high and opening low are, and use that as an indication for where you think the market might be going as we begin the new week of earnings. And that is what's going to move the market in the coming week. For those of you that are gold members, stick around. We'll go through our stocks to watch. And for those of you that are not gold members and would like to see other free videos, you can go to www.optionsuniversity.com/free gold, and there may be some things of interest there for you. So with that, this is Butch Shorak, Options University, Monday, July 16th, 2012, and we are full-fledged in earnings, and we know that news overpowers everything, and that's the state of the market that we're currently in. It is a news-driven market. Thank you. And to our gold members, welcome back. Let's take a look at our stocks to watch. First thing we're going to look at is the SPX and see where exactly we're stacked up. We're we closed at about 1357, right up against resistance, this 1358 area. This is where we had it from last week, so we noticed we completely blew through that 1345 level as we began a new upcycle in an uptrending market. And what can we expect? Well, we're at a crucial point here. Are we going to bounce up higher and continue on up, or are we going to have an inside day and basically capitulate some of this big move that we had on Friday and then start back down? Or are we going to continue back up, headed for that previous level of 1375 and possibly even higher? And then we'll definitely know that we are in an uptrend as we have a low, a higher low, a higher low, and we have a high, a higher high, and a higher high, and what we're looking for an uptrend is a higher high. It's hard to imagine that we're going to get that with the news that's out there, with the European problems that are going on as far as the recession in Europe. But you know, it's our job to trade what we see, not what we think. So let's see where they want to take this market as we go through earnings season and the excitement that occurs with earnings season, because news overpowers everything. Next, we'll take a look at Amazon, see that it looks very much like the S&P, following the S&P. Buy signal with a higher high, higher low on Friday. Let's see if this continues on up. Basic target around 230. A nice 12-point move out of Amazon, as Amazon has been trading in a range for basically since May. So Amazon certainly is one of those stocks to watch. Be leery. Earnings are on 7/26, so you know, you'd be careful holding through earnings, as you never know what's going to happen with these companies as they announce. Notice what happened at the last earnings. Obviously, the Wall Street was very happy with the last earnings and still has not even begun to close that gap that took place with the last earnings. It can go one way and it can go the other, and I never know which way it's going to go. Apple also has earnings on 7/24, so we're talking about next week as far as the earnings for Apple, but we see that it's had a bit of an earnings run, pulled back a little bit with the overall market, and now is beginning to bounce, and it could be headed for higher highs and a breakout as we have that last week headed into earnings. Watch for that buy signal and see if you can take advantage of Apple running into earnings. AutoZone, as we see, has been moving, actually moved before the market moved, and had its breakout or higher high on Thursday, and then it was kind of a precursor as we saw the market move on Wednesday, Thursday, and then Friday didn't do a whole lot as it was getting up near resistance. Potential for AutoZone only about 10 points higher, so not much of a move with about 3% potential there. So AutoZone already had its move, and earnings are yet a bit of a way off. As we see, earnings are not even close to 3 months away. All right, next let's take a look at CMG. Earnings are this week, so wait till after earnings before you consider doing anything. Certainly was trading sideways, pulled back with the overall market into a new sideways trend, and we'll see what happens. This is a stock that can have some dynamic earnings and can see some big movements out of the stock. For those of you that like to trade earnings, use your favorite strategy. To trade a stock like this can certainly have a big move. It's just a matter of your risk profile whether or not you want to play those kind of earnings strategies. Next, we take a look at Google. Much talk about Google in the overall market. It's got a looming lawsuit from its shareholders. So Google has lost its pizzazz and basically has been trading in this trading range between 590, 555, and earnings are coming up 719 this week. So wait till after earnings unless you have an earnings strategy that you really like to play. All right, with that, now let's take a look at isrg, also running into earnings, and we see earnings are coming up in very shortly. Did give you a buy signal, could have a bit of an earnings run as we see earnings taking place very shortly. Might want to wait till after earnings to decide what to do with this medical company. All right, next take a look at MasterCard, seeing that it is running. Earnings are way off for this. They're not until August 1st. So you got a buy signal here on Thursday, and it is running with the other financials. So MasterCard certainly looks like if the market keeps heading up, this could be a horse you might want to ride. On the bullish side, McDonald's certainly had a big move on Thursday prior to the market moving, and then we see kind of stalled out on Friday after that big Thursday move, but watch for this to break out if the overall market does and potentially head back to some of those previous highs as high as 102 in the first quarter. So McDonald's is the largest restaurant chain out there. Certainly seemed to have enough good news on big volume. These are the kind of charts you're looking for when you see that kind of a volume move and that kind of a candlestick in a chart. It usually is a sign of something good coming in the future, as Wall Street cannot hide how they felt about whatever news that was. All right, Nike can't even close the gap, having troubles. Can earnings affect your overall run? This thing only went up last year. Obviously, earnings are pulling back, and they didn't like what they heard in earnings. Look at that big old candlestick. If this can get up there and close that gap, we'll watch the moving average come down. We'll watch the price move up to that gap. Watch this very carefully to try to make some money on the bearish side of Nike, as it has lost some of its pizzazz and just isn't doing it right now. It'll take a while before Nike can turn around that kind of bad news. Priceline, we see, has kind of lost its pizzazz too, as last quarter they came out with an announcement that they did not expect to have as big a numbers because all of their European bookings were really backing off, and it hasn't shown us anything in the stock to tell us that it's been any different, as we're in that new trading range from 675 down to basically a little above 600, and we have earnings coming out on August 2nd for Priceline. Always has been known to have nice runs into earnings, not seeing it yet, and you're about 2 weeks away, so it may not be a bad time to take a look at potential earnings run. But watch this carefully. It may stall out at that previous high. All right, with that in mind, let's take a look at W.W. Granger. All of a sudden caught on fire on Thursday, and Friday made another nice move, sitting at resistance. 200-day moving average sitting right above it. It'll be interesting to see whether it can break out of this trading range or whether it's destined to trade in this trading range the rest of the summer. Earnings on this are July 18th. Certainly could have an effect on whether we get a breakout or not. So with that in mind, that is the market that we saw last week, the coming market for the next week, and this is Butch Shorak for Options University. It's Monday, July 16th, 2012, and we are in the heat of earnings season. Thank you for being here.